Hello, today we are going to answer the question, how high can Bitcoin go this year and in the future? My videos are not meant to be fun or entertaining, but to actually teach you something worth investing your time in. So if you're serious about investing in Bitcoin, this video is made for you. The world of money is changing faster than most people realize. Central banks are printing trillions, inflation is eating away at your savings, bond yields nothing, stocks are overextended, and for many people, traditional assets no longer feel safe. But Bitcoin is different. It is a decentralized, fixed supply, self-custodied asset that is gaining attention globally. But how far can Bitcoin really go? Can it compete with gold? Can it become a global reserve asset? And what do the world's most credible investors and economists think about its future price? Today we will go deep into Bitcoin price prediction from some of the biggest names in finance and crypto. But this video isn't just a forecast reel, it is an educational deep dive. You are going to see exactly why these price targets exist, what models they use, what economic assumption they're based on, and what their critics say. Understanding how experts think gives you an edge. Knowing the rationale behind these bold calls help you make smarter decisions. 1. Michael Saylor, the executive chairman of MicroStrategy, has become one of Bitcoin's most vocal figures. Since 2020, he has accumulated over 550,000 Bitcoin through his company and personal holdings. At the Nashville Bitcoin Conference, Saylor presented his 3 case scenarios for Bitcoin's price by 2045, starting with the first one. His bear case is $3 million per coin by 2045. The reasoning behind his conservative scenario is that Bitcoin would capture a part of the world's wealth, but with limited adoption from institutions. His base scenario is a Bitcoin at $13 million by 2045. Saylor's primary scenario assumes Bitcoin would absorb substantial capital from traditional assets like stocks, bonds, real estate, and gold due to increased institutional adoption, regulatory clarity, and its recognition as a store of value. For this scenario to come to life, Bitcoin would have to grow at a compound annual growth rate of 29% over 21 years, which Saylor notes is plausible given Bitcoin's historical compound annual growth rate of over 200% from 2011 to 2021. Michael Saylor's last and most ambitious scenario sets Bitcoin at $49 billion a coin by 2045. This scenario assumes Bitcoin becomes a dominant global asset, demonetizing traditional store of values like gold, real estate, and also assume widespread institutional and governmental adoption, including banks custodying Bitcoin, fair value accounting, and significant capital flow into Bitcoin as an hedge against inflation and currency devaluation. Saylor has his eyes set on the long term as he views Bitcoin not as a currency but as a digital property, a monetary network that is superior to gold, portable, divisible, and incorruptible. He argues that Bitcoin is the best vehicle to store value in a world drowning in fiat currency. But Saylor's predictions are not universally accepted in the crypto space. While Bitcoin maxis agree with him, critics argue that Saylor is biased in his predictions as his company's valuation is tied to Bitcoin's success. Either way, love him or hate him, he's betting everything on Bitcoin and his thesis is internally consistent. Cathie Wood is the CEO of ARK Invest, an investment management firm that has over $30 billion worth of assets under management. In 2021, she set her forecast to $1 million a coin by 2030, but with the growing adoption and some other signals, in 2025, Cathie Wood's firm decided to update their price prediction for Bitcoin, and here are the 3 case scenarios. Bear case, $500,000 per Bitcoin, equating a 32% compound annual growth rate. Base case, $710,000 to $1.2 million per Bitcoin, reflecting a 43% compound annual growth rate from December 2024. Bull case, $2.4 million per Bitcoin, assuming tighter active supply and strong institutional adoption. This is a 60% increase from her previous 1.5 million estimates. She bases her scenario on data models and capital flows. Her belief is that as institutions allocate just a small percentage of their portfolio into Bitcoin, the supply squeeze will force price to go up exponentially. Add to that the increased adoption by public companies and nations, Bitcoin's fixed supply nearing its cap, ETFs opening the doors to retirement funds and IRAs, and a generation of digital narratives growing up with Bitcoin as their gold, and you understand why those bold predictions might not be delusional. But you have to keep in mind that Wood isn't saying Bitcoin has to hit that price. She's simply saying that if adoption continues along current paths, it is where we land. Cathie Wood's Bitcoin forecast, calling for a price between 1.5 million and 2.4 million by 2030, has turned head, but it hasn't gone unchallenged. Critics argue that her projection relies on overly optimistic assumptions like mass institutional adoption, global regulation claims, popularity and Bitcoin replacing traditional store value. Many also point the volatility of her own investment products. ARK Invest flagship fund, ARKK, saw massive gains during the 2020 bull run, only to experience sharp drawdowns after 2021. The volatility has raised questions about her risk profile behind her big bets on disruptive tech. Skeptics say that her forecasts tend to ignore macroeconomic cycles such as tightening monetary policy, which can crush over-leveraged innovation sectors. Finally, some argue that the boldness of her predictions sometimes overshadowed her realism. While Cathie Wood remains a respected voice for innovation, her $2.4 million Bitcoin call is far from a consensus view and reflects a very specific, high-conviction worldview. PlanB, the pseudonymous advocate of the stock-to-flow model, shocked the financial world by predicting six-figure Bitcoin based purely on scarcity. The stock-to-flow model compares the total existing Bitcoin supply to the new coins created annually. Gold has a high stock-to-flow ratio because not a lot of gold is dug out the ground every year compared to the amount of gold there already is on the planet. And so does Bitcoin, especially after each halving event, which reduced by half the amount of Bitcoins created each cycle. Bitcoin's predictable reduction in issuance every 4 years mathematically leads to a price explosion. His original model pointed to $100,000 plus by late 2021, a prediction that famously fell short. Despite that, he still projects $400,000 to $1 million a coin by this cycle. While the stock-to-flow model captures the scarcity side of Bitcoin, it misses a crucial part of the equation, the demand side. It goes without saying that an asset can be as rare as it can be, but it isn't worth anything if no one wants it. And PlanB's model misses this point. The stock-to-flow model also forgets to account for the Bitcoins that are put back into circulation or taken out of it by long-term holders when they decide to hold or sell. So as expected, critics argue that stock-to-flow ignores demand, relies on past performance, and is prone to narrative bias. Even Vitalik Buterin, the founder of Ethereum, said it is pseudoscience. But for many, it was their first exposure to thinking about Bitcoin like a commodity. And despite not being a good prediction tool, it can still be useful for other purposes. Tim Draper. Let's talk about one of Bitcoin's earliest and loudest supporters in the venture capital world. Tim Draper is a Silicon Valley billionaire and the founder of Draper Associates and DFJ Venture Capital. He is best known for spotting disruptive trends early, backing companies like Tesla, Skype, Hotmail, and SpaceX long before they became giants. That kind of foresight gives him serious credibility as someone who understands transformative technology. In 2014, he purchased 30,000 Bitcoin from US Marshall's auction of Silk Road assets at a price of around $6,000 per coin. His price prediction for Bitcoin is $250,000 per Bitcoin. His prediction was originally for 2022, and as you may already know, that didn't come true. But Draper hasn't walked it back. Instead, he has extended his timeline and now believes Bitcoin could reach $250,000 in 2025 or shortly after. So what is the reasoning behind his thesis? First, as every forecast on Bitcoin, the main argument is the supply cap. Draper emphasizes the 21 million cap and compares it to fiat currencies that central banks continue to print. He argues that Bitcoin's deflationary nature will make it increasingly attractive in a world of monetary instability. Second, the network effect. He believes Bitcoin's value will grow exponentially as more people use it, just like the early internet. The more wallets, transactions, and integrations, the stronger the monetary network becomes. Third, female adoption. Draper has said that only a small fraction of Bitcoin's wallet today are held by women, and when women begin entering the space at scale, the market will double or triple rapidly. But this prediction isn't without critics. Skeptics argue that $250,000 per Bitcoin implies a 5 trillion market cap, which would require massive capital inflow and a global behavioral shift. They also point to the lack of mainstream usage for payments, and note that Draper has been consistently off timing. Some say he's too ideologically driven, shaped by libertarian worldview that favors decentralization over realism. Still, Draper's early conviction and track record means his thesis can't be ignored. His vision for Bitcoin is bold, and if he's right, the next wave of adoption may already be forming. Next is Raoul Pal, a former hedge fund manager and macro investor who's become one of the most respected voices in the crypto and financial world. Raoul began his career at Goldman Sachs, co-managing the hedge fund sales business in equities and equity derivatives. Later, he ran a successful global macro hedge fund and went on to found Real Vision, a media platform focused on finance, crypto, and macroeconomic analysis. Pal has been bullish on Bitcoin since the early 2020s, but his forecasts are more fluid than dogmatic. His current outlook suggests Bitcoin could reach between $200,000 and $500,000 by 2025, depending on how macro conditions evolve. But let's dive into the theory behind his thesis. Raoul Pal's thesis is centered around global liquidity cycles. He argues that whenever central banks ease monetary policy, whether through rate cuts or money printing, liquidity flows into risk assets. And according to Pal, Bitcoin is the purest play on global liquidity. When money is cheap, Bitcoin tends to outperform everything else. He also points to the rise of institutional adoption, with spot Bitcoin ETFs approved in the US and the accounting chains allowing fair value treatment of digital assets. Paul believes we are seeing a new wave of capital entering the space, not just from retail, but from pension funds, insurance company, and asset managers. Another key idea Raoul pushes is reflexivity, a concept coined by George Soros. It means that rising prices attract more attention, which increases demand, which drives prices even higher. He believes Bitcoin's past bull runs have followed this exact pattern, but not everyone agrees with him. Critics argue that Paul's model is too reliant on liquidity and may underestimate the risk of political backlash, regulatory overreach, or technological disruption. Others point out that he has frequently revised his timeline. In 2021, he forecast a much higher price than what materialized. Paul's strength lies in framing Bitcoin not just as a speculative asset, but as a macroeconomic instrument that reflects the health of global capital flow and monetary regime. Whether he ends up right or wrong, Raoul Pal helps investors see Bitcoin in context, not just as a number, but as a reflection of where the world economy is headed. So what should you take from all this? First, don't treat predictions as guarantees. They are a mental model, ways to understand how smart money is thinking. Second, focus less on the number and more on the logic. What are the assumptions? What needs to happen for that price to be real? Finally, your edge as an investor comes from thinking long term when others chase pumps. If you made it this far, this channel is made for you. Leave a like and subscribe if you want more educational videos on crypto and finance. And if you want to dive a bit deeper into Bitcoin, I recommend you watch this video where I compare Bitcoin and real estate. See you there!